Hi, I'm Brian Moorman. Welcome to the IFSL Brunsdon Asset Management Market Update. Before I introduce our investment manager, I just wanted to mention that the Brunsdon funds themselves have reached 100 million in value, which we're absolutely delighted with. The cautious and the adventurous fund performance has also been very strong indeed. Here's to the next 100 million. This morning, I'm pleased that we've got with us one of the investment managers from Brooks Macdonald, Frank Atkins. Good morning, Frank. We have a number of questions that get asked by our clients, and I wonder if we could go through the more common ones, please. The first one that really we get asked very, very often is with regard to the recent increase in interest rates. Can you perhaps take us through how the rise in interest rates will affect the BAM funds?
Thanks, Brian. We've seen the interest rate rise from 0.25 to 0.5%. Last week, Mark Carney and the Bank of England announced it. The funds have actually been set up for a rate rise for quite some time. Because of the bank's policy of forward guidance, we and the markets have anticipated that rates were going to rise. The economic indicators have been good, and really it's kind of left the Bank of England with little choice but to raise rates. But we have to bear in mind that they are only going back to where they were in the immediate aftermath of the Brexit vote in June 2016. So we do need to be realistic about the levels that they're at. In terms of how we play this within the funds, we have an underweight to gilts. Gilts are typically affected, can be quite heavily affected by rises in interest rates. So our underweight position to gilts should be beneficial. And the other impact is on the currency. If interest rates rise, then that typically should have a strong impact on the value of sterling. So we have to be careful with our currency hedges within the funds to make sure that we're on the right side of that trade.
Thank you, Frank. The other frequent question that we get is with regard to Brexit. Can you tell us how the latest developments affect your investment decisions?
Thanks, Brian. Yes, it's a very topical question. Over the last couple of days, we've had obviously a very big development. David Davis, the Brexit Secretary, announced that Parliament would have a final say, a final vote on the outcome of the Brexit deal. But what was interesting was that it wasn't an opportunity for Parliament to be able to stop Brexit or to revoke Article 50. Essentially, they will be able to vote on the deal that we have been offered, or we are going to be offered by the European Union, or if that is rejected, we will leave the European Union without a deal. So this, I suppose, does make the scenario of no deal a lot more likely. But at the same time, it does provide certainty, I suppose, that Brexit is not going to be reversed, and I suppose we have to live with that situation within the funds itself. Currently, we have a decent split amongst the UK between the FTSE 100, which is dominated by companies which are exporters, and you would think would be worse off in the event of no deal if tariff barriers were perhaps applied. But we also have a fair amount of exposure to the FTSE 250, which typically are more domestically orientated companies, and so they will, in theory anyway, suffer less in the event of a no deal outcome. So at the moment, we monitor developments as they go on. A lot can still change between now and March 2019, which is the date when we will leave the European Union. But at the moment, we continue to sort of hedge our European exposure in the general sense of the word.
Thank you, Frank. The FT 100 has recently reached record highs. Can you tell us how this affects your current thoughts on valuations, please?
Yeah, it's another interesting question, isn't it, Brian? I don't think concern is the right word. Clearly, we are aware that the FTSE 100 is at levels which are slightly higher than they have been over recent years, but we have to look at the overall situation before we make a decision on whether we think they are too high. Inflation is starting to pick up, sort of between 2 and 2.5% now, which is generally good news for equities. It means that the values that companies can sell their stock at should rise, and in turn that boosts profits and in turn boosts share prices. So that is a natural occurrence. in terms of the way that we manage the funds, we manage our equity allocation, we will always have a good spread of equities across various different geographical locations. And so if we do think that the valuations in the UK are becoming slightly elevated, then we can always look to perhaps decrease our allocation there in favour of perhaps Europe or Far Eastern emerging markets, where valuations are at slightly lower levels.
Thank you, Frank. And can you take us through any recent changes that you've made to the funds to reflect market conditions, please?
2017 has been a relatively quiet year in terms of the adjustments that we've actually made to the funds. That's the cautious fund and the adventurous fund. And that really is a reflection of the fact that we've been comfortable with not only our asset allocation, but also our fund selection, and I think that's been reflected in the positive performance that we've had this year. Two changes that I can take you through. We made a switch within the cautious fund and our property exposure. We switched out of a property fund which had a great deal of exposure to companies like British Land and Land Securities, who operate in the prime London and South East sector. And we think that with the Brexit uncertainty, it's perhaps prudent to reduce our allocation there, and we moved into a property fund which has more of a European-wide exposure and isn't as exposed to as I said, the prime London and South East market. In the adventurous fund, we've made a change to our Japanese exposure. Although we've maintained our overall allocation to Japan, what we have done is switched around the way that we're exposed to the currency. We are expecting a strengthening of the Japanese yen. This is after the re-election of Shinzo Abe as Japanese Prime Minister a few weeks ago, and we think that will have a positive impact on the price of the yen. And so what we've done is we've introduced a hedged currency Japanese fund, which will benefit if sterling weakens against the yen. But other than that, no, we've been happy with the way we've been allocated, and like I say, hopefully we can continue the good performance for the remainder of 2017.
Thank you, Frank. And thank you for watching. I hope you found that interesting and informative. And as always, if you have any questions or queries, please be in touch with us at Brunsdon and in touch with your normal Brunsdon contact. Look forward to seeing you next time. Thank you.